I'm ready.
Thank you.
Well, good afternoon, everybody. It's Henri Vinan, CEO and co-founder of Akinova, and it's a real pleasure to be with you here today. Albeit for those who somehow were enjoying the pandemic, if anybody was, I decided to join via cyber medium, as this is the topic of the conference today. Now, as Christine just said, we think that cyber insurance is really all about partnership. And so talking about the topic, it's really important to understand how cyber insurance started and where it's going and how it should be able to support businesses in general and organizations in general. So first thing, a little bit about Akinova. We are a regulated marketplace at the intersection between insurance and capital markets because we believe that to be able to underwrite risks which are far more dynamic, if you think about it, cyber insurance is certainly something that is about a year or people expect to be about a year, but the risk itself is far more dynamic. And therefore, bringing the raw capital much nearer to the risks is very important to be having the right risk-adjusted returns for investors, but also to be able to get the right capacity for businesses and organizations. So first, before we jump into the history of cyber insurance, a primer on how insurance works. I mean, it sounds remarkably simple. You have basically, you sell a product, which is an intangible product, so it's a policy with a promise to pay. In the event that certain bad things happen, you collect premium and you hope as an underwriter that you will pay fewer claims and as a result make a profit on that part of the business. Once you have collected the premium, then you have, according to certain regulations, you can reinvest that premium in capital market bonds, stock securities, and other things. So it sounds very simple. And in addition to that, the insurance industry is not small. It's actually systemically important. It's about north of $7 trillion worth of premium a year. The insurance industry has an asset base of about $35 trillion. And because, of course, it's a levered product, it insures globally about $540 trillion of assets. So, quite chunky. So you'd think, well, it's very safe, it makes a lot of money, it's all very exciting. But what has been happening is for about the last 10 years, there has been a very soft market. And a soft market means that insurance companies have no ability to really price and to be paid for the risk that they assume. In addition to that, of course, COVID-19, the opioid pandemic, another one of those, climate change, models which are not particularly adequate to be able to understand the risks, under-reserving, et cetera, et cetera, et cetera. And then you find that actually many insurers have had to consolidate. And so if you are a company or an organization and you're exposed to a few sources of capital to underwrite, then the reality is that you probably will have lower limits or the amount that you could claim in the event that the policy triggers. But also you probably see that premium are going up because the last 4 years, we certainly have seen a hard market, which is prices are going up and limits are going down. And every week you find that insurance companies get out of classes of business, so particular lines of business. And that makes for a very complicated landscape for organizations to insure themselves. So when we think about the whole landscape, it is actually a more volatile landscape for the insured, but also for the capital that underwrites the risk. So we need to really think about a different approach to doing business. And so first, let's go a little bit through historic of the insurance industry and the evolution. So phase one of the insurance evolution, I will call it the dark ages. Now, the dark ages was cyber insurance. A number of underwriters were very careful about how they were underwriting risks, quite small, for about 20, 25 years, where cyber insurance was often given as a little sprinkle on top of the policies that you had for your buildings, for your fleet of vehicles and everything else. And a little bit like salt and pepper that you would put on a sandwich, not particularly enlightening, and very little client due diligence. So you don't really understand the risk that you're underwriting, and the boardroom has very little visibility of what's going on. Phase two of the insurance industry evolution, I will call it the carefree and happy years. So from 2015 or thereabout until about 2019, some major cyber events started to percolate into the boardroom's consciousness. And then, of course, just before the pandemic, of course, people started to really think about, well, there are major online operators with breaches, global logistics, marine operators, and all of those are starting to be something that people think about. So at that moment in time, there is more premium, so more policies are being sold. It is quite a profitable business still. So the claims to premium ratios are still in favor of the investors, which allows more capacity to come in because it's attractive, which means that you can underwrite more businesses. Then bam, phase three. Well, we get to the teenage years, which quite often people will think about painful growth. So ransomware as a service is a thing. You can basically have a very asymmetric cost to opportunity ratio for the bad actors. And you have largely people who really don't understand the business dictionary of the cyber world and the cyber technologies. And how it actually really works, which means that actually the insurers don't really appreciate what they underwrite. The claims start to go up rapidly, and it leads to some insurers having very unprofitable business, which means that they will withdraw capacity and you get down into a downward spiral. So far, what you find is that it's a very adversarial model where the insurer is trying to understand the organization's risk. The organization basically doesn't really want to fill in 15 forms to be able to get a limit that's probably way too small for what they need. And there is that really once a year model where you hope that by having filled in that questionnaire on January the 1st, that by mid-year, never mind by January the 2nd, you find yourself with a risk that's actually very, very different and a very different landscape. So it's a very them and us, right? So I'm the insurer, I try to understand your business. Well, it's an overhead, why am I doing this thing? And then, of course, if you are the insurer of the insurer, called the reinsurers, and behind that, all the capital stack of the retrocessionary market, the insurance-linked securities market, and ultimately the capital markets, which is larger than insurance, you find yourself with a dreaded worry. What if all one technology that's well embedded right across the internet and right across businesses and organizations around the world, what if they all fail at the same time? So it's an accumulation risk. And the accumulation risk is really what people think about a catastrophe. You've heard of natural catastrophes. Well, cyber catastrophes can have very, potential very large ticket size, of course, as you stop economies and you have a whole bunch of different things, is the potential. But when you really peel the onion, you actually understand that the way the cyber environment is organized is very dynamic because, as we heard in the previous speakers' questions, people are very important. And actually, it's really organized for society, which is about people. So the key in there is to understand the risks. So I'm going to go now to phase 4. And I will call that the age of reason, which we are just entering. So far, we've talked about risk transfer. So I'm an organization, I have 5, 10, 20 million, 300 million, some of the largest financial institutions, $500 million to $1 billion, of cyber-related risks, which could be in business interruption, it could be a whole bunch of things, it could be automation in my factories, and I want to transfer it to you, who will then underwrite my risk. And I think we need to think about risk sharing. And risk sharing, keeping in mind that for any organization, and this is not just relevant for cyber risk, it's about people first, processes second, and tools third, in that order. So when we think about the age of reason, we need to think about the people and the client organization first. Yes, it's all about outcomes, but it's all about outcomes and having the business dictionary at the employee level, which of course includes the board, having the awareness, but also the proactive threat detection. Human behavior can be actually very positive when trained to actually pick up that feels wrong, but also at the board level, so that the board level really is addressed and speaks to service providers, insurance industry, technology providers, and others with a business dictionary of value at risk. Boards speak about money, reputational risks, time, resources, value at risk. They don't necessarily speak about bits and bytes. They really don't necessarily talk about firewalls, phishing, smishing, vishing. I mean, whatever version of vishing you can actually find, it's not the business dictionary of the boardroom. So having the business dictionary to interface with the people who can then allocate the resource of the organization is super important. The second one is the processes. Historically, cyber insurance has been about once a year, I ask you, how are you then? And then you have a question as long as my arm, a questionnaire as long as my arm, and you think, crikey, why do I have to do this thing here? When really what you think about is, well, the cyber risks change all the whole time, the whole day long. So you are there thinking about, well, why is it relevant? It's a little bit like asking someone for health insurance. So how are you on the 1st of January? Trust me, I don't smoke, I don't drink, I do healthy sports. And on the Tuesday, you smoke like a chimney and you drink like a fish. So you need to have a far more dynamic way of underwriting. And I'll give you the analogy of an aircraft. When an underwriter, so an actuary, calculates the risk, they typically look at historical data and then do some statistics and very clever modeling. It's a very data-driven profession. Cyber insurance, of course, and cyber risk is very dynamic. And if you were to underwrite a client as you would fly an aircraft, you just basically say, for instance, let's say that we're flying from Helsinki to London. You would take off from Helsinki. Well, when you go and ask your pilot, you don't just say, where did we take off from? You know that because you were there a few minutes before taking off. You're asking, where am I going next? And cyber, of course, the environment, there are petabytes of data. So it's about having the ability to look through the front window of the aircraft. So if your organization were the aircraft, and be able to anticipate where are we going next, as opposed to where have I been, which is the historical way of doing basically cyber underwriting or any underwriting in the insurance profession. And then, of course, the third thing is about the tools. And the tools, yes, it says about detection, monitoring, backups, all the things that you would expect, but it's also about regulatory technology. The regulatory technology is, for instance, regulation for payments. Is it allowed to pay for ransomware in certain geographies? The wording for covers. So there's a big debate around cyber war exclusions. The war exclusions were drafted 80 years ago, 80, not 2 years ago. So there's a big debate as to what does it look like. Or do we go indemnity? So if something bad happens, I make you whole. Do we go parametric? If you're down for 2 days, I pay you X and that's it. But it's also about financial technology. Risk sharing is also about co-insurance. I'll take some risk, you will take some risk too. It's about self-insurance, captives. Do we need to have a once-a-year process? Do we need something that's a little bit different? So in the last few minutes, I will just give you prediction. And there are potential 2 scenarios that I can see when it comes to cyber insurance. A good scenario, all the brokers are, of course, very worried about their clients' risk profiles. But I'll pick one. Gallagher's very bullish in terms of how cyber insurance is going to grow. And they say cyber insurance inevitably becomes just as significant as the property and casualty sectors. Cyber will need massive amounts of additional capital. So if you think about the $540 trillion of insured assets worldwide, about probably $180, $190 trillion of that is property and casualty. So it's all the physical, the non-live things. It's all the physical assets and a lot of physical assets, which is an issue because, of course, cyber very often is an intangible risk. But it will need a lot more capital. And for that, you need to bring that capital much closer to the risk. You need to look forward to be able to understand the risk that you're about to go through. And then you can basically bring capacity as you can see what are profitable lines of business and which one are not. Now, a less good scenario is that we're all at sea hoping that defense is the only solution with no additional safety net. Insurance, if you think about it, is contingent capital. That's all it is. It could be a banking line of credit. It could be an insurance policy. That's basically what it is. But if you now don't have that availability, then companies with good risk profile will self-insure. Large captive, operational cash flows, and so forth. And the less good risks, so the organization less up the curve of cyber awareness and security and cyber resilience, will basically continue to try to get insurance with fewer and fewer limits. So the limits will basically reduce, which means that when you claim, you don't really have anything that's useful to you. And that is not a good recipe, because a lot of those are going to be small and medium enterprises. And if you think about it, there were some data from a large reinsurer a couple of years ago that within a year or two of having a major breach, SMEs on average will have about a 30 to 40% chance of basically dying within that period. I mean, that's huge. That's not very good odds, particularly when you think about that SMEs make up about 50% of the economy of most countries. So we'd be there in some sort of lazy-ware environment, which is certainly not what any one of us wants. But I'm an optimist. I like to build businesses. I love to work with people, and I love to work with technology. So I'm going to choose the former scenario. And that requires a dynamic partnership between our organizations, the cyber defense advisory training industry, and of course, the risk management and insurance industry. Well, are we there yet? The answer is no, but we're certainly starting to be in the age of enlightenment, which is great. I love enlightenment. This is the best periods of society. But we need to tool up and we need to educate ourselves more. We need to make sure that we understand that the board and employees and the service industries to those organizations have the right business dictionary, and that we are therefore able to co-opt the cyber insurance market backed by the right amount of capital from capital markets. Well, is it going to be a picnic to get there? I'm afraid it's not. However, the true potential is amazing. We certainly are in a new age. As people often say, the future is already here, but it's not equally distributed. But as we actually starting to go and be able to understand cyber risk and an intangible risk, we can then go to beyond cyber. And having insurance policies which react to businesses and which really react to the intangible nature, so underwriting the client, not the class. You know, class is your buildings, your fleet, etc. Well, as a business, that changes the whole year long. Being able to underwrite the intangibles, which make up more than 80% of most businesses now, not just the physical asset, but the intangible assets, that's a mind-blowing, super large opportunity, of course, commercially, but also it's so important for the society at large, and systemically important for that matter. So we all have a task around this event and beyond to make that work. And actually, if you think about it, it's probably one of the largest, and I'm going to use the acronym that I thought you might hear sometime, called ESG. Well, actually, it's one of the largest ESG risks that we all have to face. And it requires a true partnership to operate at scale. So that's the speech done, and I look forward to hearing a couple of questions.
Thank you very much, Henry. Let's give him a round of applause. Now, I have a very brief question for you. So you were talking about kind of the second scenario, or the scenario that we're hopefully venturing to. So what kind of a time span are you thinking?
Well, it's already started. I think the way organizations respond now by having the the understanding to be monitored throughout the year, I think, is really good. I think if you'd asked me a couple of years ago, most businesses and organizations would say, so you, cyber insurer, want to monitor my business and be able to understand what the risks are that I face, but you don't really understand what I'm going through anyway, so it's a waste of my time, and besides, I don't want to share that information. I think that train has started to sail. We certainly see a number of businesses which are actually in the cloud with the tools to be able to instrument their business in a safe and secure way. I mean, you don't want to have a new path, a new leak path in some way. I think that is starting to happen. And the reason why it's happening is twofold. One, if you don't do that, you may not have cyber insurance at all. And if you have some, it will cost you 3 to 4 times more than what it cost you 2 years ago. And you'll probably have half the limit that you used to have. So is it really that useful? So to maintain that usefulness, you can see that dynamic underwriting. The second reason is because it's actually some businesses, not all, but some businesses see that there's a usefulness to it. The cyber hygiene is going a lot higher throughout the organization.
Sounds good. Thank you so much. Let's give him another round of applause. Thank you, Henry.
Thank you.